you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everyone. This is Harold Green of Brightree Financial Group, and it is time to stop doing what you hate. I hope your life is going well and that you are having a wonderful and fantastic day. And I'm really excited to share the information that I'm about to share with you because I think it's going to be a game changer once you understand this one thing when it comes to the investment world. And I'll talk to you about it in a second, but my mission has shifted and has changed. And I really want to make sure that the people that I work with are in the top 3% of all the people in the United States when they retire. Because 3% are going to retire with everything they need. The other 97%, they're going to struggle immensely. So a while back, I created a program called Rapid Retire to help put people in position to retire 7 to 10 years sooner than they normally would by just doing the simple stuff that everybody else does. And so in my firm, I've gone to being more of a quality service versus like trying to get in as many clients as I can and trying to get in as much AUM as I can. I've switched from that. So our focus now is to grow our current assets under management to as much as we possibly can. Like, if you have $1 million in your account, I want to get it to 5 million. This is our goals have shifted. And so now I'm not out there aggressively marketing, trying to bring in new clients and stuff like that, but we're getting referrals left and right. And quite frankly, I don't want to ever turn anyone away. But what I'm saying is that if you work with me, you're going to have to understand a couple of different things, and you're going to have a certain mindset about it. And so I want to talk to you about the 1% investment management fee myth. I want to talk about the 1% investment management myth. It is a myth. It is a fairy tale. It is not a reality for a lot of people in the world or in the United States of America. I've done my due diligence on this. I've done my research on this, and I'm trying everything I can do not to be frustrated by how I'm about to share this information with you, because it's extremely disheartening. A lot of people fall for it. A lot of people believe in it, and they really don't know what they should be getting for what they pay. So are you ready? 1, 2, 3, let's get it. Let's talk about the 1% investment management myth, because quite frankly, it is a myth for most people. It's only a reality for those who are, who are on the ultra high net worth. And if you can circle back and go listen to the show that I put out titled, "Do You Need a Professional?" And that's going to set the tone and it's going to help you understand things. But I don't want to repeat all of that in today's show. But I do want to talk about what are you supposed to get for 1%. So I went out there to a bunch of different websites and I stumbled across something where one of the things they show you is that, if you give somebody $100,000 and they charge you 1%, and you get 4% over something like the next 20 years, that's basically something like $28,000 that you paid them for the initial $100,000 investment over 20 years. Now we're talking 4%. The person is getting you 4% over the next 20 years. And it says, in addition, if you were able to invest that 28,000, you would have earned an additional 12,000, additional return if the fees paid were invested. And it just kind of shows you like you would have way more money if you took the $100,000 and then you earn 4% on it, every single year. Here's what's missing in all of that. I don't know who in the world could take $100,000, turn it into $220,000 over 20 years, and that still be enough money. Like, this is why people end up in the 97%, because these numbers are factual. And if you multiply these numbers up and you say, what if you get 8%, right? What if you get 10%? What if you get like 15%? Like, and then you pay $100,000 over 20 years or $300,000 over 20 years. If you're, let me put this out there. All investments carry risk of loss. Before investing, carefully do your due diligence, understand your risk tolerance and your time horizons, and make sure that you go talk to someone and get second, third opinion or whatever it might be about your financial situation, and understand like fees and things like that. So I'm breaking this down to you like right now. Okay. So I'm going to preface it by saying this. If over 20 years you pay somebody $600,000 and you're sitting on 5 million at the end of that 20 years, like how upset would you be? I hate to make this comparison. Like, okay, someone builds you a house, same thing. You paid $600,000 for it, and 20 years later, it's worth 5 million because you built it in a good neighborhood. Do you? How upset would you be? Do you go back and say, "My God, I should only paid $100,000 for this house"? No, you don't do that. And so I'm sorry for being comical, but we're talking about the impact of fees on your investments over a long period of time, and then you have people trying to sell products that are like trying to say you don't need an investment advisor because look at what they're going to take from you. You just put this money over here and you'll be fine by yourself, like all of that. So this is why people end up in the 97% because of this. And so if you work with an investment advisor, okay, the question is this: are they just buying mutual funds for you, holding those? Or are they just buying stocks for you and holding those, right? What should you pay for that? You shouldn't even pay 1% for that, because if their strategy is just to buy and hold, then, no, that's not it. But are you getting something else out of that investment advisor too? Like, what else are they doing for you? Are there any other services that are of great value to you that are wrapped up in that 1% fee? And so here's my thing. I'm going to get into my rapid retire financial planning process and what it is that we charge our clients and what it is that we do. Okay. So you can go on my website and download my ADV and go to page 5 of my ADV. And if you want to pause the show and like go get that right now and read along with me, you can do that. Pause the show, go get the ADV, pull it out, and then go take a look at that. But when you come on board Brightree Financial Group, the goal is to get you in the 3% if you're not already there, and to implement the rapid retire financial planning process. This costs money. It's important though, right? Now, I want to talk about the financial planning services that we offer. So these services include the following. And it's real quick: review and prioritize your goals and your objectives. That's very important, right? Now, if you're coming in and you're talking about, Harold, just charge me 1%, I'm not doing any of that, right? Because you have to go hire a financial planner, right? I'm not going to do that for just 1%. That's just how we do it. Develop a summary of your current financial situations, including a net worth statement, very important. Cash flow analysis, insurance analysis, very important. Reviewing your current investment portfolio and developing a management strategy. That's very important. You're talking about a strategy. We're not talking about just putting you in the hottest mutual fund. This is what a lot of people do. And that's what you get for 1%. You get in the hottest funds and then you ride it, and that's it. Assessing estate, net worth, and liquidity. This is important because we talk about inheritance money and things like that. So if you're working with me and you inherit $1 million, you got 10 years to get that $1 million out, because the IRS is going to penalize you at the end of the 10 years if you don't. You have to work through that and figure that out. Then there's tax planning that goes into that, right? I mean, there's a lot that goes into working with a financial planner or an investment advisor. And you got to understand what it is that you're doing. If you're working with someone like me, then basically we're putting everything together for you. But if it's just you're looking for 1%, then you're not going to get all of this. And it's just a reality. And we also go into, like, down here on page 6, the fees and what we charge. And so one of the things is my fees are higher than the normal investment advisor because, again, we're implementing strategy here. And I'm not charging you $5,000-$6,000 a year to review your financial plan every single year. All of those fees are wrapped up in your investment management fee. You get all of that. And I discount my financial planning fees every single year because my investment management fees are higher. And so it's very simple. So when you first come on board, I'll charge a financial planning fee of $3,500. And then every single year after that, I'm only charging you $672 to review the financial plan and to update it. I mean, that takes a lot of time, because my main goal is we're implementing our 10X strategy inside your portfolio because, again, I'm trying to grow your portfolio as large as I possibly can. We're trying to mitigate risk. We're trying to find new opportunities. And we're also implementing options overlay strategies on top of the stocks. And I don't know any investment firm for 1% that's going to dig and do all of that research that'll try to get you those returns that you need or that you should be getting out of a hot stock market. And here's the thing, in a 1% situation, a lot of times your investment advisor is not taking advantage of a hot stock market when it's hot. They are not aggressively moving your funds around. They're not aggressively looking for themes and trading in themes. They are sitting there and you are in the hottest funds and you're hoping to God you beat the S&P. That is what's happening right there every single day. And if that's what you are expecting, then you pay someone to do that. But for 1%, Brightree is not going to do all of that for you. And as a matter of fact, right, it's just not what we offer on a long-term basis. You may get an introductory fee of 1% depending on your situation. And I have sole discretion to do that, right? But normally I do not, okay? So again, when you come on board, you're implementing a system. We are implementing a strategic system. I am not squatting on your assets, going on vacation all the time, playing golf every day. This is not what we do. I want value over quantity. I'd rather have 100 great clients with $300 million under management than 20,000 clients with $1 billion under management. That's not what we're looking for, because a lot of times it gets watered down, okay? And it just becomes messy, all right? So I just wanted to share that with you and let you know that that's what it is that we do. And so I get a lot of questions, right? Like, so past performance, like how a lot of people ask me that. Okay, so how have you beat the S&P and different things like that? I get a lot of those questions all the time. And it's not coming from one inner particular person. But it seems like people are trying to like qualify the reasons why they should work with me. And I want you to understand something here, okay? It's not so much that you have to qualify me to work for you. You have to qualify yourself whether or not you are a good fit in this firm, and the strategies that they have, because a lot of times it's not a good fit. And sometimes you'll come on board and it's like, oh yeah, I was expecting this and I was expecting that. And you never expressed any of those expectations. And so I like to get it all up front and just kind of share with you in these shows what it is that you can expect from us, right? And then if you don't get what I've laid out in our planning strategy, then fire me. Of course, just fire me. You don't need anybody on your team that's not performing. And I'm going to tell you that up front, right? If we don't perform, fire us. But chances are, most likely, depending on your situation, and if I don't think you're a good fit, I will tell you, I'm sorry, but based on what you share with me and how you like to do things, we're just not a match made in heaven. And that's okay. We're both free to walk away and find other opportunities for ourselves, okay? So I'm going to go in and I'm going to talk about a couple of different accounts that I manage for some clients. And this is very interesting, okay? This client has been investing with me probably for about maybe 6 years now. I think it's been about 6 years, okay? And their largest account, it has well over $1 million in there. That account is up 185% over the last 6 years, okay? They have another account that has about $100,000 in there. And that account is up just in the last 2 years, I believe, or in the last year, it's up 147%. And they have another account that we set up recently, and we started doing Roth conversions on it. And in the last 3 years, that account is up 889%. These are not like fake numbers. Like, I'm looking at the screen right now as I speak to you. Okay. So past performance is no indication of future results. So for me, with this client, since they're up 889%, I can probably call them up and say, hey, the average investor is like getting 4% or so on and so forth. Like, I made you 889%. Like, can I just cash everything out and like put in a money market mutual fund and like, let's ride out for the next 20 years? Cause like, I'm good, right? Can you spot me the next 20 years? Their answer is probably going to be an emphatic no, right? And I'm just being sarcastic here, but what I'm saying is that I've charged this client basically 2.4%. I've charged them 2.4%, And this is the performance. Now, I have other clients that haven't gotten that performance. It just depends on their risk tolerance and whether or not they've allowed me to do my job. And here's what happens with people when the market gets bad. They scream, they cry, they throw temper tantrums. They don't know how to handle it, right? So if you've done that before, then you're not a good fit for this firm, because I cannot do my job with you looking over my shoulder, telling me what trades I should have made and why didn't I buy this stock and why didn't I buy that stock? And this is what this guy said on TV and that's what that guy said on TV. You can go manage your own money, okay, or go pay somebody 1% and sit in mutual funds, and you'll probably end up doing the same thing to them. And this is why people always end up in the 97%, because when the market is bad, I earn my money when the market is bad, not when the market is good. And here's what I mean by that. When the market is bad, we are finding companies that are being beaten up for no good reason, and then we're riding their momentum back up. That's how I can generate 800% return like in 3 years on a portfolio, because we found the opportunities and we put the options on top of that. This client would not have gotten that for 1%. Now, I'm not saying I'm going to guarantee those returns for every single client. It depends on your risk tolerance and how aggressive you are. This client has plenty of other assets outside of this portfolio, right? They're diversified. They have a diversification of asset classes. They have different things. They have insurance. They have other things. Businesses, they have other things. And with this money, they just let me do my job. And it's like I'm an employee of theirs. And so if I'm making him that kind of money or making her that kind of money, if I'm making them that kind of money, it's simply like they're just writing me a check every year as an employee. Hopefully I get a bonus or something like that. And that's how they look at it. They don't go out there and scrub the internet and compare their fee statements with, well, the internet said I should only be paying you 1%. And I'm like, by God, look, you're up 800%. Like, who gets 800% paying 1%? Now, I'm not saying this is standard for everybody, and it's not every single year. It's we take advantage of the market when it's down, and then when it goes back up, then everybody's hip hop hooray, and I wanted to share that with you. So if you go out there and you want to put money at work for 1%, God bless you, go knock yourself out, go do that. But if you're looking for more than that, and you need more than that, and you want to be in a strategy, in a system that's tailor-made to you and your goals and your needs, we're a good fit. So if you think that's you, take the next step, hit us up, get on our schedule, and let's see if we can make something happen for you. All right. So until next time, everybody, 1, 2, 3, let's get it.
This is the podcastfactory.com.